All right, it's the 18th of October 2024. We've got about 30 minutes to the New York Open. We're going to take a look at the charts and see what opportunities we have for the day. Okay, let's get straight to the charts. All right, just a second. Let me check if I'm audible. Yeah, everything seems to be good. All right, so yesterday, so since the beginning of the week, since about Tuesday, because Monday um, was a holiday, US holiday. So on Tuesday, when I started the stream, I said that 2,700 is in sight, and we should get there sometime this week. It took a while. It took about 4 days to get there because this week has no news events. So the market has been pretty slow, but it's been very bullish. It's been very bullish since last week. So if you look at the weekly time frame, we closed the previous weekly candle closed sort of a kind of a pin bar or with a huge tail or bottom wick or whatever you want to call that, like a shooting star, pin bar, whatever name you want to give that. That's how the candle closed, with a lot of wick at the bottom. Basically, that's a liquidity candle that's grabbing liquidity from a weekly support of 2632 and pushing up, right? It broke the previous weekly low, push down further, grab liquidity from this area. That's about 190 pip area under this candle low, under the previous weekly low. That's about 190, 180 pip area. It grabbed the liquidity, and that push was sufficient to get to 2,700, right, which is about 770, was about 770 pips away. So the move started somewhere last week, mid last week, and we finally reached there today, 2,700, right? Now again, we're at all-time highs. uh, this daily candle has no bottom wick. The current daily candle has no bottom wick. There is nothing to the left there is no information on the left. Absolutely no information on the left. This is the first time has been at this price in the history of gold. Gold has never been trading at 2,700 or above 2,700. So there's no information on the left for us to know where price may reverse, turn, pull back, have a reaction at. We have no information on the left, absolutely nothing, right? All we can do is maybe anticipate price to move to 2750 next. Okay, now that might obviously not happen today. It might happen maybe next week if there is no proper pullback, if you don't form any structure on the daily, or at least on the 4. I would like to see some structure form here on the daily to know if we are going to break that structure and head to 2700, or if you're going to respect that structure and head down again. And what I mean by structure is daily resistance, or at least 4-hour resistance, right? But daily resistance will be better. As soon as you see daily resistance here, now the chart has formed some sort of technical structure that if you respect that daily resistance or that 4-hour resistance, price can head lower. It could be a pullback. Or if you break that resistance and close above it, then we are heading to 2750, right? That's some sort of assurance. Sorry. Either way, that'll be some sort of assurance to know if price is going to go down or price is going to go up. Right now, we got nothing. It's just very bullish, right? So today is Friday, is the last day of the week. All we might be able to do is look for an opportunity for a pullback and for to get in to continue this trend, right? The uptrend. It doesn't make any sense in trying to sell here unless we see at least 4-hour structure. Okay, so let's get to the trading chart. So the trade that I had opened a couple of days ago on Wednesday, finally, it was here. This is where I had entered. I had given these levels on Wednesday. Let me get rid of all of that. For now, I just don't want to cause any confusion. Okay, so let's get rid of that as well. So Yeah, so this was where I had entered. I'd given this 2668.29, 2669.5. These are two levels that I had given, and I had entered trades there, pending orders there um, on 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 Wednesday, and price did come back, trigger them, and finally went up to 2700. That was my final target. Now we are trading above 27. We've pushed another 130 pips above it. Okay, so we're going to take a look at the chart and see what zones we have, what H4 zones we have for today. Just get rid of all of these. Okay, let's get rid of that as well. Okay, so that's a clean chart for now. I'm going to leave these lines as it is. Price is not going to come there, so let's not worry about these lines. Here is this area. Yeah, that's about 300. Price is not going to drop 400 pips today, right? So because we are very bullish. So this is the area that we're going to kind of, this 150 pip area or 200 pip area is where we're going to be looking to see if you have an opportunity today. I'm not too keen on taking any trades today because it's Friday, but we are going to take a look at this area. Okay. One second. Let me just get all of this set up. Okay. Yeah. Okay. All right. Let's start. So we've got demand, 4-hour demand right here. Okay. We have a rally. We have two basin candles and a rally. Okay. So there is 4-hour demand right there. Now, further down to the left, we have demand here as well. We have a rally, two basin candles, right? Both these candles have more wick, more collective wick than body. Both these candles, and we have a rally. Okay, leg in, two basin candles, leg out. Leg in, two basin candles, leg out. Again, these two candles have more wick, more collective wick than body, and the leg out. Okay. Um, yeah, I prefer this one to this because this has two strong candles moving out of the zone, and this zone has only one candle moving out of the zone. Okay, so I prefer this zone above, to this zone. Okay. Yeah, that's all. I'm not going to look any below this because that's about 370 pips away. Let's put in the numbers on this. 283, low 396. Sorry, one second. Right. 283, 396. Close 360, 321. We'll just extend these to the right. Okay, I'm not expecting price to drop 350 or 400 pips, but even if it does, I've got that area covered, right? So that is a good 400 pips away from current price. Right, so that's the demand that we have for now. That's the closest demand level. Now let's check if we have any sort of supply. There was a rally here and a drop here, but that's a doji. And there is 4 resistance there. So we're going to just take a look at that on the 1 hour. Yeah, so on the 1 hour, there is supply there, and that supply hasn't been broken. So I am going to mark that area. I am going to mark that area because we haven't broken that area yet. So that's a rally. The 2 basin candles and a drop. Okay. So the open is 10.06, high 406, 10.06, 406. Okay. We haven't broken. The only reason I'm marking this out is because this move hasn't broken this yet. Okay. If it had broken this supply level, I wouldn't have put this red rectangle here. But we haven't broken it yet. Once it does break it, let's evaluate it then again. Now, okay, so that's supply there. Let's mark that as H1 supply. That's the only supply we have on the chart, very close to current price. There is no other supply close to current price except that H1 supply zone. Okay, right. Now, out of these, we're going to see which ones are high liquidity zones and which ones are not. We're going to take a look at the first one here. Okay. So this zone here, so there was some sort of supply here, right? If you look at there was some sort of a high there. You can call it H1 resistance, or there is even there is on the M30. If you look at it, it's probably more clearer. Yeah, as you can see a rally, and you can see 2 basin candles and a drop. Okay, so that would have been the zone. It's very clear on the M30. It's not too clear on the H1 because it's just a wick. But on the M30, it's very clear. You can see a rally, 2 basin candles and a drop. And this move up took out that zone, right? It took out an opposing zone. So that's a high liquidity zone. That's a high liquidity zone. Okay. The one below, it's going to check if this one is a high liquidity zone or not. Again, we'll have to go down to the H1 because it's not clear on the H4. Usually these zones are clear on the H4 if they're high liquidity zones or not, but because price is just very bullish at the moment and the candles don't have a lot of the candles are not very large candles, it's not very visible on the H4. So that is why I'm dropping down a time frame onto the H1 to check if there are zones there. Okay, so yes, so here there was supply, right? There's a rally and a drop here. So the reason I'm doing this because I want you guys to understand how this works. So there's a rally and a drop. There is no basin candle. So if you go look at the M30, just like we did for the previous one, you'll see the base there, right? Perfect. So you have a rally, 2 basin candles and a drop. And this move up, this move that started here, took out this supply, okay? So because it took out an opposing supply zone, this becomes a high liquidity zone as well. Okay, let's get rid of that. Perfect. So that is what we have for the NY session today. We've got a high liquidity zone here and one here, okay? And we've got H1, we've got a H1 supply level here. Now we're going to check if this has taken out anything on the left. It's obviously not clear on the H4 because that's just a doji. On the H1 you have supply, but here you got to see if there was a demand zone here that was taken out. So maybe we'll go down the 30-minute. Well, yes, there is demand here, right? So that is demand right there. Okay, it's visible only on the 30-minute, but there is demand. So that's a rally, two basin candles, and the push up. Okay, it's ugly, but nevertheless it is demand, right? It's a very, it's barely visible on the H1, but it is visible on the M30, right? You have a rally, it's ugly, but it is visible on the M30. It's quite ugly though. A rally, two basin candles, and the push up, right? And this move down took out that. So this is a high liquidity zone as well. Okay, perfect. Okay, so we've got another about 15 minutes to the NY open. So that's what we have for now. Okay, now we're going to see if there is a possible price is close to supply right here. We're going to see if there is a possible trade here to push price down, right? It is a counter trend trade. So if I do take a trade here, I'm going to be very cautious, and I'm going to lower my risk down significantly. But that is a high liquidity zone because it has taken out here. It has taken out demand here. We're going to see if price can come back down here. We have a push down here, right? Okay, so this is a liquidity candle from that zone. So is this. Price has already come into it. So if I were to draw my fib here, we've touched this level right here, right? And we can come down here. So let's leave that there. 4, 6, 1058. 406. Okay. On the 30-minute, I have an engulfing candle right here. So I'm going to mark that candle. This is what I usually do. Okay, I'm going to mark that candle right here. The high is 318, low is 881. 318, 881. Okay, that's a 44 pip zone, fairly large. Let's look at the 15-minute time frame. 15-minute, yeah, it's the same candle. Let's look at the 5-minute time frame. And then we have this candle right here. Okay, that's the candle. That's the largest candle in this move down. Price has come deep there. Okay. So 175,881. Okay, perfect. 10 minutes more for NY Open. And there is a rally, base, and a drop right here. So I'm going to mark that right there. This open is 114. There's one here. A rally, two basin candles, and a drop. 162. Okay. Yeah. So if I do get in on a trade, if I take a trade here, it's somewhere there with a stop loss of about 28, 29 pips. And if I get one here, it's a stop loss of about 23 pips. Okay, anticipating a move down here. That's the idea, to get a trade coming down here or even down to 2,700. That's the idea, right? So yeah, we are having wicks here. We are reacting to this candle right here. On the 15-minute, we're going to wait for the market to open. I'm not going to try to take any trades, even though prices pull back and touch this level. I'm not going to do anything right now. I'm going to wait for the market to open. This candle has no top wick, so it's very likely that we come further up. If we do reverse here, we're coming deeper into this. So if I do take a trade here, I want to get in as deep as I can so that my stop loss is very tight. 15, 16 pips or maybe even 20 pips, right? So I'm going to wait for the market to open. I'm not going to do anything right now. We have about 10 minutes, 8 to 10 minutes for the market to open. So this candle has no top wick. Let's look at the 1 minute. Yeah, these candles are all fine. It's this candle right here. This candle right here has no top wick. So price can come to that area to drop down. Okay, so I'm going to pay attention if price gets there. Maybe that's a place that we can take a trade. So see 30. Okay. $80. Okay, perfect. Now if price comes down, so that's the area 2711.15 and 2711.6 and higher 2712. That's the area that I'm looking to take a sell trade to come down. Okay, about a 80, 90, maybe even 100 pip move down, maybe 80 pips. 80 pips move down from here if we pull back. Okay, so there is a, so let's just look at this once more. On the 15-minute, this candle broke the high, this candle broke this high, this candle broke this high. Let's just draw this here. This broke this high, this broke this high. This is pre-NY. Yeah, this high is 318, 881. 881, 318. Okay, yeah. 2711. 2711 or 2712. That's where I want to get in. 2711, 2711 or 2712. Right? Those are the areas that I want to get in to take a trade. On the M5, that's my demand zone. That's my supply zone. You have a rally. These are basin candles, and that's a drop, and there's one there. If I go down to the M1, yeah, perfect, and there's one here as well. This one here, open 229, 229. Okay. Rally, base, drop. Stop loss just here. 4, 6, 4, 6. All right. These are the levels, okay? These are the levels. That's above that dark red area is the stop loss. TP is down here, okay? That's the area. That's the sell trade that I'm looking for. If price goes against me, I'm going to manage risk when price starts to break these candle highs. I'm going to manage risk, okay? That's the idea. So looking to sell from here, stop loss above this dark red area here, TP down here, or even further down at 2,700. If price goes against me, then I'm going to manage risk at these candle highs here. All right, pretty simple. Now, here down here, I want to look at, okay, so there is, in this high liquidity zone, there is this big candle right here. Okay, so let's mark that. This high 279,396. That's a wide zone, 89 pips. So let's go down to the smaller time frames and take a look at that. Okay, so here, right, this high here, that's a manageable candle. That's 65. That 2 is too big, but high 90.77. Perfect. Let's go down to the 5-minute. Yeah, yeah. Gonna have to keep it there. Three, 2, 8, 3, 2, and this high is 977. Okay, let's see once we get there. Let's take a look at what's happening here. Okay, so 15 minutes, a few 15-minute candle is just about to close. 7. Okay, these are the areas that if price does come down, these are the areas that I want to buy at, okay, with stop loss probably below here. Okay, let's take a look at what's happening now. Okay, the NY session's just opened. If we come up here, I'm going to take a trade. Okay, gonna place pending orders there. And here as well. Okay, and maybe one here. 62. Yeah, that's fine. Then if you do get deeper, 318. Okay. That's fine. Mm. Okay, so I've got pending orders here at 2711, 2711.6, and then up here at 2712.1. Okay, and then one up here. They're very small positions. Okay, so one is triggered. The idea is for price to come down to these lows at least. So stop loss is about 28, 27, 28 pips. I will manage risk if you get deeper in. Obviously, I'm not going to let my the trade hit my full stop loss. And the idea is we should come down to break these lows here. So yeah, I'm going to keep that at 30. Yeah, we should come down to break this low here. Then 65. Okay, let's leave it like that. I'd like to see price come up deeper. That is a 1 minute bearish engulfing candle already, but I'd like to see price come a little deeper before we turn down, because we should come and break this low here. This is a pre-NY, this is a pre-NY low. There is no bottom wick here, so price should drop down to break this low, but I'd like to see price go a little higher to come down before it decides to come down. That yeah, that triggered 714 triggered perfectly. That's okay. Then the next one is as I said, I'm not risking too much on this because I don't want to give away my gains. I made about 4.5%, a little over 4.5% this week. I don't want to give those gains away, so I'm going to risk a very small amount, less than 1% on this entire zone. Okay, it's less than 1%. And then if price goes deep, I'm going to manage risk so that I lose even less. That's the whole idea. That's how you manage risk, and you keep your losses really small. So that when you do make wins, it's very easy for your wins to recover your losses. Yeah. So let's see how this trade turns out. Stop loss is just above that. These are the entries. 711.14, 711.62, 712.30, or 712.1, right? And even here there is a entry at 713.118. Okay, this is the area basically. And if price comes here above, then I'm going to manage risk on this bottom entry here. I'm going to probably close this entry, because if we come deep in, I'm not going to hold a 28 pip drawdown. I'm going to close somewhere here. This entry, I'll close it somewhere here. Okay, so let's look at support resistance levels. Where can price pause? Okay, where can price pause? I do this every day. Once we're either in a trade or just about to take a trade, I draw these SR levels and I try to draw them as accurately as I can, because that's important to know where price is going to bounce. So there's a level right there. Okay, you can see the number of touches. So we have to break below this to come down. Okay, and the next one, there's a level right here. These are minor support resistance levels because we're very bullish and we don't have a lot of bearish structure, right? So these support levels are on the lower time frames, maybe on the 30-minute and lower, 30-minute, 15-minute, 5-minute. You're probably not going to see them on the 1 hour or the 4 hour, because we're very bullish at the moment. So there is support there. Yeah. And the next level is here. Yeah. Right. Those are the levels. It's no point extending these to the left because price has never been here. So there's nothing to the left. This is all the structure that we have. Okay, we are heading up. Let's look at the 1-minute time frame. What happens if we get triggered here? Yeah, we came right here and we're rejecting right there on that 1 minute. See how this 1 minute candle closes. Okay, second order triggered. We're going further up. Third order triggered. I'll see what happens. Price needs to close below this support, this gray area right here, or inside this gray area to continue down. If it doesn't and stays above, then we're heading up. Then there's no need to hold these trades. Two six. It's 5. Yeah. It's open as 50. This low is 10. Perfect. Candle needs to close below this gray area. Okay. 5-minute candle needs to close below this gray area right here. 5-minute candle needs to close below this gray area to come down. If it stays above, this 5-minute candle is about to close, I'm going to manage risk. Okay, so this candle closed above. If this candle breaks this high, let's see the 15 minutes. Yeah, the 15-minute candle has closed above this as well. So if you break the high, I just wondering if it will break the high and come back and close below. Yeah, I'm going to wait for price to break this high. Okay, that's 15 pips. Yeah, that's 20 pips stop loss. So once you break this high, then I'm going to close maybe 2 positions. Okay, I'm going to keep it. It'll very likely break this high. But once you break this high, then we're heading into this range here. Right, we're heading into that 10 pip range. So then I'm not going to hold. I'm going to close 2 of these positions. Yeah, because price might break this high and close back below this support. So let's see what happens. We have to close below this support here, this gray area right here. A 5-minute candle needs to close below this. If we break this high here, then I'm going to close these two positions right here. So that'll be a 20 pip stop loss, and this one will be a 15, less than 15, yeah, about a 14 pip stop loss, 14, 15 pip stop loss, these two positions. Because it's very important, as much as you spend time drawing zones, identifying areas to trade from, areas of interest rate from, it's as important as that is also to manage risk when a price goes against you. Don't let price hit your full stop loss. Never do that. That's just insane. You got to keep your losses small so that your winning trade uh, doesn't have a lot of work to do. It can easily recover a small loss. Otherwise, you're going to be piling up positions on the next trade, hoping to recover. So you're going to be kind of doubling down on the next trade to make up for the previous loss because your loss is big. So if your comfortable risk for the day is 1%, then try to lose 0.5% or 0.6% or even 0.7%. Okay, we are coming up here. Yeah, price is reacting to this support area and pushing up. Candle hasn't closed below it yet. A 1-minute candle hasn't closed below it yet. So we are trying to push up here. We should break this high. Price should break this high. This is also why I divide my positions. I don't take my full, sorry, I don't take my full risk uh, at just one entry. I divide it down so that when I'm closing, I can scale in and I can scale out. Okay, so we're breaking the M15 high now. That was the bottom wick to break the M15 high. So once we come here, I'm going to close two positions. So this high is 318. Yeah. Yeah, here we go. Finger on the trigger. Yep. Okay. Two positions closed. Right there. Right there. The first position I closed here, but the next one slipped. I think I closed about 2 pips higher than what I wanted to. That's fine. That's absolutely okay. The important thing is you manage risk. You don't let these entries, even the stop loss was here, I didn't let it go that extra 8-9 pips. I didn't let it go that extra 8-9 pips, right? You save something from your risk. You don't let. Um, now I want to see if a 5-minute candle closes below here again, then I can add on more risk. But if it doesn't, then I'm going to close these trades. Like if the yeah, so if this sell trade is to work, this is the time for price to now push down and close a 5-minute candle below this support here, right? This is the time. If you do close, then yeah, I want to see a 5-minute candle close below this. If you close below this support right here, this gray area, I'm going to add on risk. Wait for a pullback and add on risk to continue down. Doesn't seem like it. We don't have a rejection yet. There is no rejection on the 1 minute. It's just bull candles closing, coming down to create a bottom wick to continue higher. So there is no rejection. Need to see a clear 5-minute rejection from that 2713.18 or somewhere around that area to push down. There isn't one. We're just creating a bottom wick to go up. So we're going to manage risk again. Price goes up, breaks this high, then I'm closing this trade as well. This bottom one will as well, right? So then the stop loss on that is about 12, 13 pips. We break this high here. So this high is 352, 352. Okay, perfect. Yeah, so we're closing bullish. So next one breaks this high, then I'm closing this trade as well. Yeah, we are pushing up. That's a engulfing candle to push price up. Yeah, now as soon as you break the high, I'm going to close another position. Coming down to make a bottom wick to go up. This candle should break this high. If it breaks the high, then this setup is no longer valid. We close the trade. Price is moving much higher. A 5-minute candle has to close below this support here for price to continue down. If it doesn't, we're going right up. We have to close. A 5-minute candle has to close below this support level that I've drawn. Right? This could, unless it closes, there is no sell opportunity unless it closes. There is no. I'm not going to add any more risk. We're just coming down to create a bottom wick to go up. A 5-minute candle has to close below this support, right? So this support. So you saw how I drove it. You see the touch here. It's got to close below this level right here. So we on the 15-minute we have prices broken two highs. This 15-minute is just about to close. I'm going to wait for this 15-minute candle to close, and the next one breaks this high. I'm closing everything. Yeah, that'll also be the 30-minute candle close. That means 30 minutes is closing above this 30-minute level right here, this resistance right here above these candles. Then there is no need to try to take sell trades from this area. The zone is done. We are deep inside the zone. So if it's got to work, it's got to work now. Price has got to push down now. To push down, create a bottom wick on this candle and continue down. So we got about less than 3 minutes. Let's see what happens. This candle has got to push down. If it closes right here, that means the next candle is going to break this high and continue higher. Yeah, so we are going up. I'm going to manage risk again. 2713.5 is where I close another position. Right there, closed. Okay, done. So, yeah, that's it. So I gave the sell a try, and that's it. That was the opportunity I gave, anticipating price to come down to these lows, but it didn't. And you can get rid of that. You can get rid of this. Get rid of all of that. Okay. So price has broken through this. This is no longer high liquidity zone. Let's get rid of all of this. Okay. There is literally nothing to do now. Because if I'm buying, I need to wait for price to come right here. That's the area I was looking, hopefully willing to take a sell trade at. It didn't work out. Price broke through this zone. So there's nothing, no other structure to the left. There is no price action to the left. So I don't know where price is going to turn or reverse or pull back. So there's nothing to do. So I lost maybe what, 0.6%, 0.5%. I don't know, maybe, I don't know, how much did I lose? 30. Yeah, 30 minus. Yeah, I lost about 0.5%, I think. Less than that. Yeah, less than that. 17.6. Yeah, maybe less than 0.5%, maybe 0.4%. So I risked 1% and I lost about 0.4%. Little over maybe 0.41 or 0.42%. So that's how you manage risk. It's so important. So my risk for the day was to give this to risk 1% here to see if we can get sells. Didn't work. Instead of losing 1%, I lost about 0.4%. Right? That's how you trade. Now, price is bullish. There's nothing to do here. Absolutely nothing to do here. We are very bullish. We are not even, price is not even trying to pull back to the EMAs, right? We did come back here in the London session very close to the EMAs, but it's pushed up 135 pips. So just to recap what's happened for the day. Today's session might be a very short session, the stream, because I don't see price pulling back 230, 240 pips to take buys to go up, right? And I don't chase price, so I don't chase price here. I need to see price pull back here to be able to take a buy. So I don't see price going to pull back suddenly 230, 240 pips because there is no news event either. Anyway, let's just look at what price has done. Let's look at what price has done for the day. Okay, so that's the open of that's the open. That's where the market opened, right here, this candle. Okay, been very bullish. Soon as the market opened, we didn't even create a low. We just pushed straight up 200 pips. Okay, we don't even have an Asian low. See, we're pushing harder. We're pushing harder above. Okay, so what is that? Okay, so that's a candle. Asian low. About here, that is the Asian low. It's hardly an Asian low, it's just a range. Low, 234, 234, 234. Okay, that's the Asian low. Then price pushed up here, 530. Yeah, so that's the Asian high right there. That's the Asian high, 1195, 95, 95. Okay, and then we have the London high, which is there. That's the London high right there. 1406, 1406, 06. And then we have the London low right here. Low 176. Okay, so here's what price has done. The market opened right here. We couldn't create a low. We just ranged and pushed up during the Asian session. So Asian session traded about almost 200 pips. We pushed up, then we pulled back a bit, broke the Asian high immediately because it's very bullish, created the London high, came back, created the London low, pushed back above the Asian high, broke the Asian high for a second time, ranged again, and then broke the London high. Okay, now we might see a pullback to retest the London high or the Asian high before continuing higher. That might happen, but that's not my trade. You can trade that, but that's not my trade. I don't. I wait at a high liquidity demand zone for a trade, for buy trades. To me, those are the areas that offer the low risk, high reward, high probability entries, right? Not these areas. But these areas are places you can take buys, but that's just not my trade plan. So price has already moved 245 pips. We are ranging about 260, 270 pips a day. So it's not much on gold. If you look at the daily time frame, the daily candles are not that big, right? You see the daily candles, that's 300 pips. That's less, that's about 250 pips. That's about 230 pips. So the daily candles are fairly small. A healthy, even this candle right here, 228 pips. So these candles are all for previous 4 days, 1, 2, 3, 4, these 4 days, the entire week. Prices ranging, the average daily range for the candles are about 240, 200 and less than 250 pips, right? So today we'll probably go over that. We'll probably reach 300, maybe even 400 pips because it's the end of the week. But there is no structure to trade from unless you just blindly buy and have a 200 pip stop loss because you don't know where price is going to pull back to. So you have a stop loss, then you start trailing under the M30 candles. Unless you start do that, there is no way to buy, and I don't trade like that. Okay, I just wait for the pullback to high liquidity zones to take trades from. So there is no opportunity. Price may pull back to this area, right, to the Asian high, to the London high, and then continue higher. The next possible area price can pause is 2750. That's a long, it's a fairly long way from now. That's about 350 pips from now, 340 pips from now. That may not happen today. That might be next week. So today there is nothing. There's nothing. So I'm going to be here maybe for another 30 minutes. Yeah, 30 minutes, and then call it a day. It's a Friday. I tried to give this zone a chance because we did have a push down, break below demand here, M30 demand, H1 demand. Gave it a chance, but price is very bullish, so I entered in this area right here, but price broke above the highs. I closed my trade, kept my loss down to about 0.4%. Yeah, I think what was I 4.3 at the beginning when I started. The week was 4.3. Yeah, so yeah, maybe by 0.4% or less than 0.4%. Is what I lost. So that's great. That's a win for me. So now you gotta either wait for a pullback. The 1 hour, there's nothing. The 4 hour, there is nothing. We gotta wait for the 4 hour candle because maybe when the 4 hour candle closes, you might get a demand level right here, right? So if this 4 hour candle closes bullish, you probably get a demand, a rally, single basin candle and a rally. You probably get a demand zone right here. That's about a 95 pip zone. And inside that, you can look for a liquidity candle. So this candle right here, this candle is opened at 9 server time. If you go down to the 1 hour, go down to 30 minutes. Yeah, so that's these two are both liquidity candles. Go down to the 15-minute. Yeah, so price may pull back somewhere here to this candle right here, right? But you got to wait for the 4 hour candle to close, and that's an hour and a half from now. Yeah, 1 hour 20 minutes from now is the 4 hour candle close. If the candle closes bullish, so keep in mind, okay, here's the plan. If the 4 hour candle closes like this, bullish here or either higher, if it closes bullish above this wick here, above this yellow line, if it closes bullish, then go down to the 15-minute. This place right here is where this candle right here is where price can come down to for a liquidity grab, right? You might come down to this candle here or anywhere in this range, and that's a big range. That's a 79 pip range. I will not trade a big range like that. But if you are looking for buys, that's the area to look for buys at. But the 4 hour candle has to first close. The 4 hour candle has to close. This high is 976, low 176. 176. Okay, right here. So if you go down to the, yeah, it's that candle, 5 minutes. Let's look at the 5-minute chart. Yeah, so there is a candle there, there's a candle there, and there's a candle there. So yeah, here so price, wait for the 4 hour candle to close. Let's see how the 4 hour candle closes. That's about an hour 15 minutes from now. If it closes above this yellow line right here, then wait for a pullback to this candle, sorry, or this candle, these three candles, this one, or this one. Okay, that's what you do. You wait for a pullback here, and then stop loss under this candle right here, or under this candle, and then look for price to push up again all the way to retest wherever the candle closes, to retest those highs. So you might get about a 100 pip move, 125 pip move going up. But don't chase price here. Don't chase. Wait for the 4-hour candle to close. If it closes above here, wait for the pullback to this candle, or this candle. One of these three candles. Wait for the pullback to go up again. Okay, that's the trade idea for Friday. But I'm not going to be here. I'm going to be here for another 15 minutes, and that's going to be the end of the stream. Yeah. All right. Mm. Mm. 3, 6, 5. Okay, perfect. So these are your support levels. So as I said, wait for the 4-hour candle to close above. If the 4-hour candle closes above this yellow line right here, that's the London high. If the 4-hour candle closes above the London high, wait for the pullback. Price will pull back. Price must pull back to these 5-minute candles, either this one, this one or this one. Once it pulls back, you look at these support levels. That's where you can take a trade from, right? To go back up again. And you probably can run 100, 150, or even 200 pips, right? But you got to wait for the pullback. Got to wait for the 30-minute candle is closed to doji. 1-hour candle is not yet closed. No bottom wick on this candle. Price has to pull back here. Yeah. Okay, 13 minutes for this candle to close. I'll be back in about 6-7 minutes. Okay, the 15-minute candle is trying to close back in. Um, Possibly pulling back here. Size 976. Six 634. Considering taking a buy here to go all the way up there. And then a very small position and then manage risk. Um, we're trying to create a bottom wick here, right here, on the 1 hour. This candle has no bottom wick. 30-minute has no bottom wick, so price is pushing down to grab liquidity to go, should probably go higher. Okay, it's just one buy there, very small position. $40. Yeah. 70. Two 721. 110. Okay. Thirty-minute closed back inside this range below here, but we are very bullish. So price could come deeper here and then reverse, right? That's the idea. Yeah. So I've got partial positions should close somewhere here. If price gets somewhere here, we should close partial positions. The entry was taken at the liquidity candle on the 15-minute. You can see from this push up, this is the liquidity candle, this one. And yeah, this candle right here, that's the largest candle from the push up, this one here. And on the 5-minute, if you go down to the 5-minute, it's that candle right there and this candle right here. So this high is 634, this high is 76, yeah, here. This high is 479. 7. So we are pushing up. This needs to come here. Okay, but we might pull back. We might pull further down to maybe this area. So on the 1-minute, let's take a look at it. Yeah, I'm going to place a pending order right here. 34. Okay. And then one here. 79. Okay. This 15-minute candle closed with no top wick. 30-minute candle rejected and closed below again. Bearish engulfing candle. But the idea is that price is bullish and we do for 1 hour candle has also rejected and closed below, closed bearish. Let's see. Let's see if you turn here. If you don't, then I'm going to manage risk. I might take about a 1% loss. That's okay. Close below this, so price came down here. We close below this support, price should come here. 76. probably coming down here. Yeah, we are coming down here. See how this candle closes? Yeah, we are coming down here. We are coming down here. Price is coming down here. This is a liquidity grab to come down here. Low 927, high 470. 4 pushed. $40. Yeah, price is coming down here. This 15-minute candle closed inside this supply again. Pulled back, rejected from this resistance to come down to 2703.8. We should come down here. Yeah, we tapped into 1198 high. Yeah, we tapped into 1190. That is the Asian high. We candle tapped there, and this is the London low. We should come down here. 46, 41. 5-minute rejected. This one closes below this candle. This 5-minute closes below this support. We should come down to the next support. Four seven zero 2715. 275. Yeah, my entry was way too low. I should have entered here. When this candle closed, pulled back, I should have entered here, right, to come down here. Let's see if we can come down to fill this wick, at least this. Another 35 pips. Come down to fill this wick. This doji 4-hour candle. The one has closed, rejected the area. We're pushing down. Open 2703. 2703. Yeah, 2703. Okay, this candle closed inside support. Then a 5-minute candle has to close below this support to continue to this. Once we get here, we should touch this. We should touch 2703.8. But a 5-minute candle has to close below this support to come down. My entry was too late, way too late. I should have entered here, right here. Once this candle closed back, that was a liquidity grab. That's a liquidity candle. Should have entered right there to come down here. With a 30 pip stop loss to come here. Should have been a 30 instead of such a wide stop loss. Right. The idea is anyway for price to come to this support. A 5-minute candle has to close below this support to come down. Let's look at the 1 minute. Yeah, there's no bottom wick here. So we should take this, the price should break below this low. There's no bottom wick. And neither is there a top wick on these candles, so we might pull back for higher before we come down. If you pull back higher here, I might take another entry to come down. And we should break this low. There is no bottom wick. Yeah, there we go. Broke the low. Now we should continue down to this support. 1 minute has closed below this support. We should continue down. 3, 10, 20, 35, yeah. I just walked away from my screen too long. That should have been the entry right at that resistance level. That's the liquidity candle. Price pullback, so the fib is drawn on that candle. Price pull back to 2711.95, exactly the midpoint of the fib. Stop loss should have been about 25, 26 pips to come all the way down here, 80 pips and even 100 pips. That was the trade right there. I entered way too late. Okay, so 5-minute candle has rejected that area. We should push down to this support here. And if we do push down to this support, we should push down to that support. Let's get rid of these. Let's get rid of that. Should push down to that support. 15-minute candle has closed. To 700. Yeah. If this 1-minute closes bearish, then if it closes bullish, then we're going to push up. It's close to doji. So probably going to push up for liquidity and then come down. Yeah, we're going to probably pull back up for liquidity and then come down. But the 5-minute candle has to close below this support, below this resistance area to come down. If it doesn't, then we're going to push. If it closes back inside, then we're going up again. It's 2.5 minutes of the candle to close, so that's a long time for a 5-minute candle. So anything can happen. We close back here, then we're going back up here. We have to close below this. Price has to close below this resistance to come down to 2703.5. Yeah, price is pushing up. Because that's not a rejection, that's a doji. If that closed bearish, a nice 1-minute pin bar, then the next one breaks and continues down. But that's not a pin bar, that's a doji. So price is pulling back. If we close above here, we're continuing higher. Yeah, we're pulling back. Yeah, Candle pushed up again as expected because the 1 minute was a doji. Need to see a rejection here, 1 minute rejection. This candle has to close bearish. If it doesn't, then we're going up higher. That's closing a doji, yeah. So we're going higher. 5 minute closed back inside support. This is probably creating a bottom wick to go up. Let's see. We need a 1 minute rejection from here to come down. These dojis mean nothing. These dojis means you can ignore this candle and just consider only the previous candle. So this candle, 1 minute candle closed back inside support, the 5 minute candle closed inside support. So price is probably creating a bottom wick to break this high to go higher. But I want to see a 1 minute candle close below this, reject and close below to continue down. Okay, so that's nice. That's a expanded range candle. Yeah, we should come down. If you break these lows, we should come down. Should drop down very quickly here. Yeah, we broke the low, broke the 5 minute low. We should drop down. But this candle has no top wick. That's the concern. This candle has no top wick, so this candle can come up to create the top wick, or the next one can come up to create the top wick. And if it creates a top wick, then if it closes above, then we're coming all the way up here again. None of these candles have bottom wicks. There we go. Candle is pushing up, no top wick, coming for liquidity. Mm. No top wick. The next one will probably pull back up here, or this same candle will come up here. Got a top wick now, but we close back inside. We're going much higher. We're going to pull back all the way here. 44 pips. I don't know if I'm going to hold this trade then. Yeah. We're closing back above support. We're going all the way up. Yeah, we closed above support. So we're pulling back maybe here. We touch the EMS, touch the EMA, rejecting the EMA to pull back up. Wow. 5 minutes, 15 minute. 5 minute is closing very bullish. 36. Yeah, we're going all the way up here. Coming all the way up here. Yeah, it's very bullish. Coming down to create a bottom wick to break this high. Broke the high. It's that demand level right there. I'm going to wait for the 30-minute candle to close. I want to see how this candle is going to close. If it closes bullish, then I'm closing the entire trade, all three positions. If it closes bearish in this support or below this support, I'm going to leave the trade running. But if it closes bullish above this, then there's no point holding it, because the next one's going to pull back, create a bottom wick, break the high, and go up. 3 minutes more. Let's see. So yeah, so I gave my trade sell idea a second chance here, and the plan is for it to play out to come to this level right here, 2704, to this support, but it just fell short of it. Just fell short of this support area right here. What's this high? 495, and this low is 498. Yeah, we just fell short of it. That's a 1 minute rejection. Perfect. Let's see if we break these lows. That's the kind of rejection you want to see. But let's see if price is bearish enough to break this low. That's 16, 17 pips away. If you break this low, we're coming down to touch this support, and that's where I'm probably going to get out of this trade, or at least close partial positions right at the support here. Yeah, that level right there, 2704.5. Sorry. We reject closed below here. We rejected this. We should come to break the low. Once we break the low, we should drop down to 2704.5 or 2704. Partial positions, yeah, should close right there. If we close below this EMA, we should come down deeper. Should come down somewhere here, in between these two EMA, 68, 68, that's 34. Yeah, somewhere there. We should come there. This is the, what's this? London high. This is the, yeah, this is the London low. It's the London low. Should come to the London low. We rejected the London high, close below. We should come down to the London low. That's the whole idea for this trade. Okay. So 30-minute candle closed bearish. Okay, I'm leaving the trade. If it had closed below above this support, above this resistance, I would have closed the entire trade. But we closed below this support and below this support. So I'm leaving the trade. I'm going to let it run its course. We should break this low. There's no top wick. We'll probably create a top wick and then break the low. No top wick. Let's see. Yeah, 5-minute close should come down. Maybe this candle or the next candle creates a top wick and then comes down and breaks the low. And price came and tapped exactly this area again. 270. Where is that? Oof. So, yeah. So we tapped 2709.27 of the fib. We didn't close above that level, 2709.27. So since we didn't close above, we should come down to 2703.8. Somewhere here, partial position should close here or here. I'll either close it. It should close automatically or close them manually. 2704.5. Somewhere in between this. So we created a top wick now on the 15-minute. 1 minute is rejecting that area. That's nice. That's a nice rejection. Should break the low and continue down here. It was a nice area for an entry right there, 2709 for a second entry to come down here. It's a very nice area for an entry. It would have been perfect entry there. 39 pips. $15-minute. This 15-minute could break this wick, top wick, before it continues down. That could happen. Candle could break the top wick. If it does break the top wick, I just take another entry. High 945, 45. Yeah, I break this top wick. To break the top wick, we're coming back here. Then I'll take an entry somewhere here. I just don't like these entries. These entries should have been here. If these entries were here, I wouldn't have been worried at all about, price coming back to them. But now, because it's so far away from where I originally wanted to take the trade, I have to be careful. I have to manage risk. If we come here, to come back here, I got to manage risk on these trades. If these entries were here, then ideal. 20, 25 pip stop loss, perfect. But now the stop loss is very wide because I just came to the chart too late and I spotted it. I saw this liquidity candle a little too late. This candle, that's a liquidity candle to continue down. Yeah, we're coming to break this high. Coming down to break the high. $10.08. Yeah, coming to break the high here. Broke the high. Should come deeper. Should tap this red area. Broke the high. Once you break the high, if a 1 minute candle closes here or a 5 minute candle closes below the support, then we're coming down. That's a liquidity grab. Yeah. So once this 1 minute candle closes here, then we should continue down technically. If it closes bearish, strong bearish, it needs to ideally a 5 minute candle. The 1 minute is maybe not enough. This is also the NYSE open. So what's happened? Okay, so the NY session has pushed down about 100 pips. We are ranging. See if we can continue down. It's no bottom wick here. That's why I'm still interested in this trade, because this has no bottom wick. Should come down. Yeah, so we broke the high, grab liquidity. If this candle closes somewhere here, then we should continue down, but we are pushing up. 6. Yeah, okay, so I'm going to manage risk on this trade. There is little point holding this trade now. 15-minute is about to close bullish, strong bullish. I'm going to wait for 4 minutes for this candle to close. And once it closes above this support, I'm closing everything. Yeah, and that'll also probably be the end of the stream. I'm not going to be looking to take any more trades. Yeah, so we are, let's look at the 1 minute. It's probably a liquidity, a bottom wick to go higher because price is very bullish. So I'm just going to wait for this 5-minute candle to close. Yeah, once this 15-minute candle closes above this support, there is no reason to hold this trade. That's also going to be the end of the stream. That was my second chance that I gave these sells and they didn't work out. Price didn't come to where I wanted it. I wanted it to come to this support to 2705, 270450. It didn't. We created a lot of bottom wicks here to push price up. From the EMA, we touched the EMA, price pushed up. A minute and a half. And that's also in 15 minutes, the 4-hour candle is going to close. So it's probably going to close either a doji or a bullish candle. So, I mean, the previous candle closed a doji. This is also probably going to close a doji or maybe a bullish candle. And then there's no reason to hold the trade because the last 8 hours are just prices ranging basically. It's doing nothing, just ranging. Okay. Yeah, this is gonna. Yeah, okay. So that's it. I'm gonna close this trade. That's also going to be the end of the stream. Gave it 2 chances, lost 0.5%, and that's about it. Okay, so we'll be back on Monday and do the same thing. All right. See you guys. Have a great weekend.